How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Euro versus US dollar. I wasn't able to get out the daily update yesterday because I was so busy, but yesterday we had confirmed a higher swing low. So this was completing the bullish trend formula. However, today it looks like we have a bullish momentum coming into play. Why is that? Because we can see a swing low has been broken. So this is either two things, right? This is either a false break or this is a change in trend. It's either two, right? It's only two scenarios. It's either going to be a false break on sell side liquidity to then run higher, or this is a change in trend and bearish momentum's coming into play and price is failing to make higher swing highs. It's now making lower swing highs and lower swing lows. Now, you can't jump the gun unless you're really confident and you have the conviction that the market really is changing trend and you take that risk. But if you aren't confident in the change in trend yet, you either wait to see if price is going to confirm going lower. So let's say tomorrow is an up close day, right? Friday, but Monday closes down. Then you may have more conviction saying, okay, this might be a new bearish trend unfolding, or there's going to be some type of retracement or reversal. Remember, I said a couple episodes ago, we either are going to get a mid-month retracement or a mid-month reversal. So those are still in play here because price has expanded away from the consolidation. We're either going to retrace or this retracement happens to turn into a retracement and the trend completely changes. So this whole bullish idea that we had, narrative going into March, could dissipate mid-March, right? Or going into the end of March and end up below March opening price again. So we could see something along the lines like this, right? Price selling back down. If this is a false break, price is either going to do this down and then right back up again. So take your time when analyzing the trend. Now, if you look at other markets right now, so let's take a look at the DXY. So you got to do an intermarket analysis because this may not give you enough information. As you can see, dollar's still going up. So though we had that lower swing high, so we thought we had a lower swing high confirmed yesterday because price has a higher low on the left and a higher low on the right. After this candle close, we had a confirmed lower swing high. Though we talked about previous episodes that this fair value gap can still be a draw on price. It can still be. I was not really considering this one to be the turning point. I would rather see this one be the turning point. So we play it forward. You can see price is still trading up. And price also does what? Breaks a swing high formation. Now, is this swing high a false break? Or is this bullish momentum coming into play to change the trend? That's how I like to think about it. It's very simple. It's either one or two. And let's look at the yen futures. See what's going on with the yen futures. Pulling back into that fair value gap. Right, we're getting right back into it. After breaking what? This buy side liquidity pool. Remember, when price raids any swing point, there is that scenario of price creating a pullback. Just because price breaks a high does not mean it will continue just trending higher. Sooner or later inside the equation, there's going to have to be a retracement, which can also potentially turn into a reversal. So we're seeing price turn back inside this zone, this inefficiency here. And we want to see if price is going to continue going higher after this. It also runs a swing low too, as you can see. So you can see the market code here. Price ran a swing low, DXY ran a swing high. So the market is moving in market symmetry right now. Normally in conditions like this, I would find that the market is still going to be trending in its intended direction. So this is most likely in DXY and even EU, almost likely false raids to get retail traders on the wrong side. So they ran that swing low in EU. Maybe they want to get retail traders to go back short. They ran the yen futures swing low. Maybe they want retail traders to go short on yen futures. They ran the swing high in DXY. Maybe they want retail traders to go long on dollar. Who knows? But we need to wait. If it's not clear, we stick to the sidelines. Remember, we have 365 days, and so far we're in 3 months in, right? We have plethora of weeks ahead of us. We don't have to jump in every single day trying to seek a trading idea. I was telling the chat that other day, like, just because you see me show an example of a model every day, it's so that the community has examples seeing how it plays out day to day, Monday through Friday. But in particular, with the data that comes out, what days are standing out more than other days? Is it Monday? Is it Tuesday? Is it Wednesday? Is it Thursday? Or is it Friday? Or is it even Sunday? Depending on what model you're using. Now, based on the models I use, I tend to see more success on these days: Tuesdays, Wednesdays, and Thursdays. And I have to simplify that. I would say Tuesday, Thursday. And if I had to simplify it one more time, I would say just Thursday. Thursday tends to be the highest probability trade day for at least the Asian session model, and even sometimes the New York model and the London model. But you have to back test these things. Someone can't just hand you all the food on the plate, right? You got to figure out how to gather your resources and create your own plate and how to navigate through that. I'm taking my time trying to understand price action as myself too. So do understand we do have that fundamental of how to find trend, but if it's not clear yet, stick to the sidelines. Doesn't matter if you're a veteran trader, doesn't matter if you're a seasoned trader. There are going to be moments in time where you need to tell yourself, hey, I really don't know what's going on right now. So what's the best thing to do? Protect your equity and do not trade. Not trading is protection, right? Not trading is a good trade, because if you had no idea what that day was going to do, why would you enter the market? Now you're just playing off of what? Irresponsibility and randomness. You got to take responsibility into your own success. If you're not finding success, you need to tweak something. And I think the biggest tweak would come by saying, picking certain days to trade. Do not trade every single day. Don't. Let's go back to EU. So before we go, just to recap, this is either a false break. This right here is either a false break or a change in trend. That's what we think. But we are also engineering, you can see, buy side liquidity pools in recent time, while simultaneously engineering sell side. And there's going to be moments when the market is trending up or down and it raids that engineered liquidity pool that it created. So let's say price is bullish and it is engineering sell side liquidity by creating swing lows and running higher and creating previous daily lows and running higher. Price may come back and take out the previous daily lows or even the swing lows just to run back higher, and everything vice versa in a bearish trend. It's creating buy side liquidity pools and then running it and then looking to go short. We see that happen all the time. It creates buy side liquidity pools just to rate it and then go short to continue the trend. Get everybody on the wrong side. Everybody wants to see something probably along the lines like this. But who knows if that's going to happen? We would have to wait for more data, right? We have to wait for each day to fully close to get an understanding. Or we take an intermarket analysis and we try to get a jump on the market. What are other asset classes doing? What are other markets doing? What is gold doing? What are all the majors doing? What are the inverse or correlated, directly correlated majors doing? So trust and believe there are going to be moments and times where there's going to be carnage. It's going to be difficult. I know we just went through daylight saving. Clocks here in New York jumped an hour up. TradingView already takes care of that for you. It's already preset. Before it was UTC 5 New York. Now you can see TradingView changed it to UTC 4 New York. So it's already acclimated. Everybody has a question about it. It's already acclimated. TradingView has taken care of that for you. I live in New York, so I don't really have any confusion. But if you ever wanted to ask me, hey, what time is it in New York? I'll send you a shot. Or you could do a quick Google search, So please don't be too confused about that. Markets are definitely having a tough time this week. I'm not going to lie. It was very interesting. A lot of setups played out, but we didn't get any entries. So at least for the Asian session. Other models like New York and London, you guys either report to me and tell me that, like, hey, I was able to catch this. I see a lot of people in the chat saying, I caught this trade with the New York model. I caught this trade with the London model. And I'm happy. I'm so happy because it's simplicity for any level of trader to understand. Peace.